Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, financial market tremors are not finished yet. Firstly, Wall Street equity markets are sliding again today. The S&P 500 is down almost 2% in midday trade. The European markets had a tough night as well, with the German DAX down 2.6%. The volatility measures are rising again, and the VIX is back up over 34, although not quite equaling the 49 spike we reached on Tuesday. Meanwhile, consumer debt growth in the US remains very strong. Although it was below market expectations, there was an $18.4 billion rise in December, growth at a rate of 7.7% compared with the same month a year ago. But there was an unexpectedly large upward revision in the November data. This is a rising pace, as overall growth for all of 2017 was 5.4%. Also growing strongly is trade. Data out overnight showed substantial jumps in China's imports and to a lesser extent their exports. Their exports were up 11% in January in US dollars compared with the same month a year ago, but imports were up an eye-popping 37%. As a consequence, their merchandise trade surplus shrank to its lowest level in a year and less than half of analysts' forecasts. German trade data was also released overnight, and for the whole of 2017 it reached record levels of imports and exports. But the December data also showed their trade surplus actually shrank in 2017 for the first time since 2009. And staying with the trade theme, the Canadian Prime Minister has repeated that no deal on a NAFTA renegotiation will be a less worse option than a bad one-sided one. And a quick update on Canadian housing. After yesterday's data showed strong growth in building consents, data out today suggested that housing starts in January actually took a small dip. And the Bank of England said it expects to raise interest rates in Britain earlier and faster than anticipated last year, responding to stronger growth in the global economy. US Treasury 10-year yield rose strongly overnight, reaching 2.88% 2 hours ago. But since then has retreated, is now at 2.85%, up just 1 basis point from this time yesterday. Their 210 curve is little changed at 60 basis points and far below the equivalent New Zealand curve of 108 basis points. The equivalent China curve is just 32 basis points, while Australia is 85. Yesterday's RBNZ MPS saw markets adjust their bond pricing very little. Behind all this market turmoil is the excessive levels of debt worldwide. The issue is peaking now because the US administration is signaling that their future debt levels will grow fast to pay for their tax cuts and new spending. But gold continues to be sidelined. This morning is at $1,318 an ounce, unchanged from yesterday. Oil prices are down again today, with the US benchmark now under $61.50 a barrel, while the Brent benchmark is just on $64.50. The currency markets have marked down our currency overnight a little. The Kiwi dollar is now at 72.3 US cents, a full half-cent lower than this time yesterday, and a full 1 cent lower than on Wednesday. And on the cross rates for a softer 2 at 92.5 Aussie cents and 58.8 Euro cents. That leaves the TWI just on 73.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.